Welcome to the Stanford Innovation Center. My name is Peter Propp. I'm the Vice President of Marketing. I'm here with
Sky Fernandez, associate at Centripetal Capital, the closest venture capital fund to the Stanford Innovation Center. We're literally across the street. So.
And we're pals, and we love having Skylar here. We love having an audience of about 20 people that's here at the center. A few more will be here soon. And encourage anyone watching to come down anytime they like. We're broadcasting on a Google Hangout, so if you ever can't make it, we're trying to use Google Hangout to do this sort of stuff. I just published it to Facebook and LinkedIn and Twitter and a bunch of different places. And what I realized last time I did this, we had to do a virtual version with the other brown bag we do because of the snow. What was that, 3 weeks ago or so? And no one could get anywhere. It turns out that people were talking in the forum on the YouTube page that's connected to Google Hangouts.
Nice.
So with that, the integration, it's like your topic, we could go to some other time, but the integration between Google Plus and YouTube is really getting interesting.
Yeah.
And so as someone who uses these sort of tools for a living, I'm delighted because it can be a little bit confusing at times, but it seems to be working out. So if anyone has any questions, they can post it to the forum at the bottom of the YouTube channel that's live right now, and we'll look to answer them. And what we're going to do is run through a few topics that Skylar and I put together, and then we'll open up for questions. Probably about 30 minutes in, and that's about how it works.
I'd maybe kick things off just even about the part of integrating YouTube, Twitter, Facebook in one, and how that's affecting things. This morning, you and I had breakfast with an investor, and he brought up his own company that he's been working with, where you can do reviews of a business or a restaurant that you're at. And there was this one restaurant where they had a flat screen TV in the lobby that is constantly showing the Twitter feed of the restaurant. And somebody was really, angry about the service they were getting, and they tweeted to the restaurant saying, the waiter's being a really bad waiter to me. He's not doing everything right. And the whole Twitter board in the lobby started filling up with that stuff, and I immediately went over and got the waiter, which is a great way to do that if that's.
They didn't turn off the Twitter feed.
They didn't turn off the Twitter feed.
To their credit.
It's funny.
So topic one that you had mentioned was Google Glass.
Yep.
David Pogue did a piece, and Mossberg as well did a piece on all the different watch options that are out there. I think this is both exciting and a little creepy, but
it is. Yeah. If you guys are familiar with Google Glass, so a lot of talk's been coming out about it, and a lot of new videos are being produced by Google to show Google Glass, where the glasses that you can wear that have a camera on it that's constantly able to take photos and video wherever you're looking, as well as has a little digital display for you to have access to the internet, other types of applications. And there is, some of the things that have been coming out about it recently are the creepy factor that every time someone's looking at you now, you could be being filmed. People are just walking around doing that. But the applications for Google Glass seem pretty significant. It's taking augmented reality to that next level of actually inserting it into the little display that you have. But I think what we've been looking at, from the VC side, there's a number of applications now that have the glasses that you can wear that have that technology built in, and it's amazing how consolidated already. If you're in the business of producing virtual 3D glasses, it's already a consolidated market of the key players are already there. Google, Microsoft, Apple are certainly going to be dominant players. There'll be a few others, but the real opportunity there is definitely more in the software than probably the products at this point.
Yeah, I think one of the applications that people talk about when they talk about Google Glass, wouldn't it be great if you knew the name of the person you were talking to? And I meet an awful lot of people, so I get a little bit confused. I wish I didn't. It'd be great to say, oh, that's so and so who you met with a month ago, and they're starting their own fund or whatever they might be doing, and you could say, well, how's that going? And you could really have a successful conversation. That's one of the applications that people find to be quite interesting.
Yeah, it was. There's a company called Face.com, that I believe was backed by In-Q-Tel, which is the fund by the CIA. And it basically allows you to take anyone's face and immediately know who it is. It was originally used for, in Facebook, you could say, I have a whole album of photos, and I want to auto-tag every photo that includes me, and it would recognize my face or recognize my friends. But if you can build that into an augmented reality situation where I look at someone, I see, okay, that's Daniel, and I see next to his face, his Facebook link, his Twitter link, his LinkedIn link, I can immediately see everything where he's worked, maybe who he's dating, news about him. Every person I look in the room, I can identify them that way. That's pretty interesting. But augmented reality has so many applications, certainly of getting directions, anything you can overlay visually. It's pretty impressive.
I think the assumption that our brains can handle that much information is a big one.
Yeah.
I'm not convinced that we actually have the ability to do that for long periods of time. At least I'm not. The other thing I think is interesting is when you think about wearable technology and augmenting a phone. Just so let's leave the idea of the glasses because maybe that's the way to do it, or maybe it's not.
Yep.
But then you talk about Apple's phone thing or watch thing.
Yeah.
That they've talked about, some band,
iWatch.
the iWatch or whatever it might be. Another way to display information, another way to display some important information for you without having to open up your phone, and I think that's very valuable. It's a lot more, to me, it's a practical step versus this other thing that to me is...
It's hard, because even on the iWatch, I had a programmer friend of mine was telling me he was talking to his family about getting the iWatch, and his mom asked him, why do you like the iWatch so much? He goes, well, because I don't have to take out my cell phone to see an email, and that was the big beauty of it, but he's just had to do that. His mom was like, that's not, you can't just take out your phone. It was a huge step, but not seeing the big picture. You're right, though. The way that you're interacting with the web, whether it's on your watch or with eyeglasses, is changing. I'm still curious, and I'm sure most people are, of actually putting on a pair of these Google glasses. I'm curious as to how it looks, because the glass is kind of up above your one eye, and looking at things with only one eye, you kind of have to close one eye to be using it, what it looks like to constantly be looking at something that's semi-transparent. That whole experience, it's a question if everyone will buy into it. And if it becomes socially acceptable to constantly be wearing these. Sergey Brin has been, everywhere he's going, he's wearing them. And he's getting a bunch of other people to wear them walking around to make it seem that this is normal. Right. And whether or not we'll all buy into that is still a question.
I think the makers of Tylenol and Advil are all in favor. thumbs up on Google Glass by the pain relief makers.
Yeah, he has a big advantage. But it's interesting, all the videos on Google Glass right now, if you Google them, you'll see the previews. They all show you from the perspective of what the camera is seeing, whether it's you're saying, Google Glass, take photo, Google Glass, film this. We haven't yet seen a preview that really gives you a good view of what it looks like to look through Google Glass yourself. Right. And that might just be something that's really hard to do a trailer for, but everyone wants to see that.
Good. Bluetooth
to your phone.
To the phone.
Yeah, to your phone. And right now, there's a handful of augmented reality applications for your phone that you can download. Anything that has a camera essentially can use augmented reality applications, but this is just putting it in a constant frame on your head.
If you want to see what augmented reality could look like with a phone, Yelp has been doing it for years, where if you hold up Yelp and there's one of their functions on a street in Manhattan, and you want to see where the Chinese restaurant is, there's all your options are going to show up, spreading out in front of you. So it's pretty it's a pretty cool way to figure out what's going to happen. It's a good example of augmented reality.
There's another example. You're in a foreign country, you want to get the translation.
Yes.
Yes.
French, take a picture of it, you get a translation.
Yeah, Google Glass even has a speaker, so it can even hear things and be translating it for you, which is ultimately kind of going towards like the Star Trek world, where you're just like everyone can speak foreign languages around you, and it's constantly translating it.
Having a wireless connection, an internet connection, makes it very susceptible for hacking.
Yep.
And then you have a situation where a person can hack and tap into the camera and spy on what you're doing and what you're seeing. And I just wondering your thoughts on the security threat of that.
Yeah, I think there's probably less of a fear on security at this point. It'll be similar to even just mobile phone security. I think the big threat will be for any country that doesn't want people to be filming things. The fact that everyone will be walking around with glasses that can do it, it's nearly hard to stop people from recording stuff. Even when certain countries were being, rebels were rising up, people were using, pens that had cameras in them just to be recording things. So I think it's less so. The downside is definitely a lot less than what the upside is for opening the world up to what's happening around everyone.
What about distracted driving? Would you like to be behind someone who's driving a car and reading the text messages on his list?
Yeah, so the question that was just asked from someone in the audience was, what about driving? Will that be a distraction? Well, Google has a solution for that, which is the Google self-driving car. So we won't have to worry about it. If all the cars are driving themselves,
You can't just buy the glasses, you have to buy the car.
you got to buy the car too. Yeah, you can buy them as a combo package. Yeah, the Google self-driving car though is definitely, most people have heard of Google Glass, but not a lot of people have been hearing about the Google self-driving car, and that's been in development now for 3 or 4 years. They've done hundreds of thousands of miles driving with 0 accidents. The only one accident that's happened has been because it was in operations by the actual driver and not by the car. But one of the things actually with security that came with Google Car is, well, what happens if you're using a self-driving car and it kills somebody? Who's responsible? Is it you or the car? And the person I was talking to had a great argument for, similar to seatbelts. Seatbelts in most situations will save your life, but there's a few situations where you can't take the seatbelt off fast enough that you get more injured because you have the seatbelt on. But by far and large, you're decreasing injuries. The same thing is with Google self-driving car. The amount of accidents that are likely to occur will dramatically go down. And yeah, a deer might get hit occasionally, and someone might get hit by a self-driving car, but it'll likely do that a lot less than if people were behind it. So it's an interesting argument.
Excellent. So the next topic is 3D printing, which is getting more and more exciting.
Yeah, 3D printing. If you guys have been tracking that, the new trending 3D printing concept has been the 3D printing pen, where you can literally take a pen and start drawing in 3D, and it has this kind of like a crayon that it heats it up and then cools it as you're drawing. And so you can literally draw a 3D box in the air, and now you have this plastic box. So you don't have to go into a little box that's actually being designed and cut through. A pen that actually will draw is pretty neat. That's right. Yeah, that's kind of what we had helped them get famous. Was they're doing really well on Kickstarter raising. It's at 1.8 million now. Yeah, I saw it before. It was like I know. Yeah, I saw when it was at 1.3 million. So it's exactly. Yeah. Hopefully they have some type of patents on it. I don't know. But 3D printing is interesting because they're finding so many different applications. I saw like 3D printing the first car, 3D printing the first room of a building. They're getting pretty crazy with the 3D printing analogies that you can extend it to. One of the scariest ones right now is there's a team that's working to build the first 3D printing gun that you can at least do one shot out of it. And the goal is to build it, make it work, and then distribute the information everywhere. And that's pretty scary for having tons of unlicensed guns. Anyone could spend a few $1,000s and be printing a gun in their garage. Hard to control that.
You also have the portion of the gun that has the serial number on it.
Yep.
The rest of the aftermarket materials. You actually buy everything else and that one. The area that has the serial number on it isn't as stressed as part of some of the other areas of the gun.
Yep.
So that's an easy area to print. That's already done.
Yeah, that's absolutely right.
Yeah, we've talked about this before, but our friends at Sikorsky are talking about helicopters in the future that are going to have they're going to be outfitted with a 3D printer on board that's going to produce metal parts as needed. So your helicopter can't get off the ground because of X part that's worn out. You look up in the database that you on board, the design for that washer, and you print the washer in the 3D printer and go put it on the sprocket.
Wow.
Tighten it up. And that's a fascinating thing.
On board.
It's basically sprockets.
That's getting closer to Star Trek, where you can kind of just, bam, I got my tool.
Yeah, exactly.
The idea is pretty cool. I actually saw a 3D printing machine and how it prints. The process itself is actually, by definition, takes a while.
Yeah.
Even if the technology works, the fact that it's still layer after layer after layer.
Yeah.
So it sounds 3D printing, but it's not.
It's not instant.
It's not instant. It takes quite a while.
But that'll speed up, just like we now have printers that are like super fast for printing. Speed will certainly increase. But yeah, you're right now. Right now, it doesn't happen immediately.
But it's all portions of the process that saves time. When you prototyping, the actual prototyping of the 3D aspect of it does take a long time. It's the entire data, right?
Yep.
But it doesn't have to be sent out. The walls that don't create.
Right.
I mean, the prototyping time is shrunk tremendously.
Yep.
Although the actual printing takes longer than.
You're right. And one of the big extension for 3D printing, there's a great TED talk on a guy that's working on printing organs and printing cells. Literally the future of laying someone down on a bed, that came in from the ER and an accident has a hole in their side. You put them on the bed and you take the printer and put it over them, and it prints cells and fills in their wound. That's like ridiculous. But then he came up on stage and he had been printing I think it was a liver or a kidney, and it was like 7 hours of printing. He took it out and showed it to everyone. 3D printing, whether it's plastics or cells, is amazing.
Right.
It was a 8-year-old woman had her jaw replaced.
That's impressive.
What is your technical challenges, the principal ones now, for 3D printing? Where it is now, what does it have to accomplish to get to a higher level of applicability?
Yeah, it's a great question. The question was asked is, what are the stages of development within 3D printing and the challenges they have to overcome? I think what you're seeing right now is, what are the extents that you can do it? What type of materials? You can do it with certain types of plastics, you with metals, certain types of acrylics. So I think doing of various types of materials is probably right now where most people are focused on. The design aspect, there's certainly a lot of software that's being developed to help you actually design what's going to be printed. And then third, as someone brought up, was speed. How fast you can actually be producing these things in a short period of time, kind of natural progressions. Size-wise, though, I'm seeing, is it from building something from small to actually building an entire room or printing an entire room for a hotel. Right now we're at I think at the beginning stages where people are just testing the boundaries of what this can do, which is fun.
There's another value add to the process, which is you can make something incredibly strong, but also incredibly light.
Yeah.
So based on ribbing and the design elements you put inside of like a ball, it could be a ball that's absolutely uncrushable.
Yep.
Because it's got all this stuff that you wouldn't actually be able to do, through a typical, rubber mold, plastic molds.
Yeah, that's a good point. Yeah, one of the beauties of 3D printing is you can do certain types of internal structuring of things because you're doing it layer by layer that would have been a lot harder to do otherwise.
If anybody wants to try a printer without buying them, the Westmore Library has them.
Oh yeah, a lot of places are getting them for everyone to use, to rent out. Kinko's hopefully will have one soon.
Right. Well, we're actually looking at getting one here with the center in conjunction with friends of Sikorsky. So actually, a show of hands, if we had one of those, who would want to play with it? Good geek. Awesome. That's good to know.
The real danger is going to come when 3D printers can print 3D printers.
That's all over. Game over.
Yeah, 3D printers that can print 3D printers. I like that. I like that.
Well, with MakerBot's first product, you actually had to assemble yourself. So it would come to you. It was a $1,000 kit. I think they lost money on it.
Yeah.
But even so, it wasn't complete. So you would order it. It would come to you, and
Finish it.
And then you'd have to finish it.
It's true. The 3D printer that could print a 3D printer, it kind of starts verging on the part of someone initially has to build it. But as a VC, we always expect one day we will see our perpetual motion pitch, and I've gotten 2 so far in the past 4 years, and I love getting them. And we always expect that someone will send us a perpetual motion machine They'll have infinite access to energy by just starting it up. And none of them are ever willing to do deep due diligence. You'd think that they would. I said, I'll set you up with my friends at Harvard, MIT, Stanford. Let's go. And they don't follow up.
Because they actually don't have it.
Yeah.
Does that lead to the quantum tech fund that you're talking
Yeah,
about?
it's a little bit. One of the other topics I want to talk about was there's a new sector of venture capital funds that are probably going to be on their way. And it's in the sector of quantum technologies. The first quantum technology fund was just raised. It's called the Quantum Wave Fund. And my background in quantum physics for a number of years, and I pivoted away from quantum physics to do more early stage technology because I realized commercializing quantum technologies was a long way out in the future to actually start making money out of it. And this fund has decided that now is the time that within hopefully the next 3 to 5 years, they think there's quantum technology opportunities that can be commercialized, that they can make money from and sell. And it's curious to see, just like there are internet technology funds, there's biomed, pharmaceutical, consumer based. There's going to be in the future likely a number of quantum technology focused funds, and for sure there's going to be multimillionaires, billionaires created within the quantum space. This hasn't happened yet. And
What's an example of something slightly concrete?
yeah, it's the first question that people usually ask is, what type of companies would use quantum technologies? The two biggies are computers, quantum computers as well as encryption. So from a high level, a classical computer can do a computation of a 0 and then a 1, but they can't do a 0 and 1 at the same time. So a quantum computer essentially can compute 0 and 1 at the same time, therefore giving it much bigger processing capabilities. And when you look at, there's a great chart, and I advise everyone to go look at it, for the Moore's Law. If you guys are familiar with Moore's Law, every 18 months, technology, processing speed doubles. And we're at the point now in the chart that in the not too distant future, the speed and the computer that you would need goes down to the atomic scale. And they have computers that can do computations on atoms. And the question is, well, you've hit a wall. How do you keep Moore's Law going? Is Moore's Law going to break down and we can't keep doubling every 18 months? And you kind of get to this brick wall that you say, well, the only way you can go past computing on atoms is starting to do a quantum computer where you're now doing computations in a somewhat non-physical location. It's able to do computations called a superposition and calculate 0 and 1 at the same time. And to give an example of what a quantum computer could do that a traditional computer couldn't do, would be like factoring a really large number, right? So most of our encryptions for security are based on really large numbers that are hard to factor. It would take a classical computer 1,000,000 years to calculate. But that's because the only way you can factor is you take a large number, you put a number into it, you go, does this fit into it? It says no or yes. Put the next number into it. Does it go in? No or yes. Well, a quantum computer can factor that almost instantaneously or a lot faster. So the best encryptions out there with a quantum computer could decode the largest factoring number. That's why you have the biggest governments in the world right now are spending a lot of resources on getting a quantum computer to work and one that can do factoring. Huge value if you can do that. But right now, to give people a little perspective on where quantum computers are, I think 3 years ago, the best quantum computer could factor 15 into 5 and 3, which is a good start. And then last year, it could factor 21 into 7 and 3. So they're making slow progress, but they are making progress. But you look at, why was this venture capital fund just focused on quantum technology? Why did they just launch? It's about 3 to 5 years out of when commercializing quantum technologies would equate to Moore's Law. Right. So you can kind of think they certainly knows where Moore's Law is working in time frame.
What's the physical aspect of that? It's still a chip concept, or are you onto something else?
Yeah, so it's a little bit of both. So the challenging parts to quantum computers is that you have to have it inside of a box that doesn't interfere with its surroundings. So with quantum physics, you talk about entanglement and a thing called decoherence and coherence, but it basically means you have to shoot, it's still on a chip, but you have to confine the chip without any measurements taking place. So it goes in, it does the calculation, but it can't be measured by anything while it's in there. And that's when it enters into what's called the superposition and can do all various calculations. and then moments later you actually send a measurement and it pitches it back out to you. One of the analogies that gets used, it's not a great analogy, but it's kind of like using parallel computers at the same time. You know, this computer doing that calculation, this one doing that one, all at the same time. The downside of thinking about it that way is that doesn't really give you the beauty behind a quantum computer, because that means that using a lot of resources, lots of parallel computers, a lot of resources. The way that a quantum computer works is by using probability theory. It uses coherence and decoherence, and all of the non-right answers cancel each other out with probability, so the right answer immediately pops out. So it's an interesting way of doing it, but right now that's the only way we can continue Moore's law indefinitely in getting that type of processing power.
The metaphor that I heard that Moore's law is a motivated correlate about the size of the
Yep. Yeah, it's amazing of what what it's expecting us to have in the future is pretty impressive as well. But in quantum computers can be used for a lot of things, from modeling new types of drugs to modeling financial systems that just the best computers we have today can't even do those calculations, but this could. And then from the encryption side, security is going to look a lot different when you have that.
A couple of points. You just mentioned the modeling new types of drugs. There's a big article about IBM's Watson computer now being used to look at drug applications, and
Yep.
did all sorts of analysis. Now, that's not a quantum computer.
No, it's a supercomputer.
It's a supercomputer, massively parallel.
If you guys aren't familiar with Watson, they had it on Jeopardy, competing against the best, and did it win? I can't remember if
Yes.
it won. And it's seeing how much it can understand linguistics of just people talking and understanding things.
They now applied it towards chemical molecular structures, I believe.
Yep.
And broke down all the existing data that might have been available, and came up with a couple of new compounds to fight a particular illness. I'm butchering the story, but that's another.
Yeah,
it's related.
it's important to always remember, like, there are things out there that our best computers still can't calculate.
Right.
Which is interesting.
Now, another thing you just mentioned, a nugget I got, because most of the math stuff goes right over my head. Another thing I got out what you just said was about the 3 to 5 years out concept, right? So,
Yep.
so they're spending time in their planning group,
Yep.
saying what's 3 to 5 years out. Is that a typical process at most mature VC groups?
No, I think it's, for them, it's as the first quantum technology fund, it really comes down to timing, right? If you're the first fund in a new sector, you're either early or right on time. They're not late. So they're either early or right on time. And if they're right on time, they will potentially get the best new investment opportunities. But if they're too early, if you can't commercialize anything with quantum technologies for the next 3 to 5 years, then it'll be unfortunate that fund was raised too early. But the next round of funds maybe will do a lot better. So don't base the track record on this first fund for how the industry might perform in the future.
But what about the idea in just general? Say we wanted to go a fund on, photoplankton,
Yep.
or something, and we say, okay, is the first focus, because we've looked at the research and 3 to 5 years out it's going to be something. Is that 3 to 5 year window, just that idea?
Sure.
Is that an important notion for?
Yeah, well, I think VCs, it's interesting because it all depends on the VC. Most VCs, I would say, are relatively risk adverse, even though they do venture capital. They're not trying to bet on necessarily new industries that don't exist yet, or hoping to exist. It's one of the challenges of electric charging stations for electric cars. Some people are going to make a lot of money in electric charging stations. I'm just not sure when the right timing is. So it makes it really hard to raise venture capital because it's a timing issue. But if you can take things that have been some validation with other companies or some traction that they're already making, it's a lot easier to make investments like that. Again, venture funds, most of them don't do that. There are the few really high-tech, we call them more, rather than cutting edge, they're known as more like bleeding edge VCs that are willing to take that risk, and they're trying to more predict where markets will be or how markets develop. But it's definitely not your average VC that does that.
Interesting. All right, so the last item we're going to talk about formally is Facebook and their acquisition of the Atlas ad server from their secret big papa company, Microsoft.
Yep.
I've never heard of Microsoft. They own a lot of Facebook. So So, you know, as someone who markets stuff for a living and does a fair amount of paid advertising for the Innovation Center, you know, Google is so much a better platform for us to achieve our goals. Now, maybe
Absolutely.
we're one sort of business, we do one sort of thing. I know there's many people spending money on Facebook, but where does Facebook find, you know, the determination that they need to invest in an ad platform, and you know, how strategic you think this is
Sure.
to their long-term, you know, revenue?
Yeah, a little background, guys. If you haven't seen the news this morning, what was big on news is that again, Facebook acquired this company called Atlas, which is a Microsoft company, and it is allowing advertisers essentially to not only advertise on Facebook, but to advertise on sites outside of Facebook, and being able to do retargeting of ads and on other websites. One of our portfolio companies is an online ad tech company. I looked at the ad space for a good 6 months before we did our investment. I know a handful of the key gurus in the ad space and the search space, and I've talked to them about this. The thing that people often forget is why Google Ads are so uniquely different than ads on Facebook. And it's the concept of what I call Mindshare. It's a really important one, and one that often gets overlooked. If you think about it, if you're searching on Google for a plumber, you're currently thinking about a plumber because you're searching. And if you see an ad for a plumber, it has high value to you. You were thinking about that, good reason for you to click it. But if you're on Facebook or any other random website and you have banner ads or things about plumber, well, I wasn't currently thinking about plumber. So the value of that ad's a lot less. So
The fact that I'm in that region and people in that region might often be plumbers, it's irrelevant. Because right now I'm looking at the latest video from whatever.
Exactly.
Yeah.
So the fact that Google does search and search ads, the value that ties with that is hugely valuable. And Facebook, while Facebook has ads and has had ads for a while now, they haven't been able to really maximize their monetization of ads on Facebook because they realized people weren't caring about the ads that were on Facebook, just like they weren't caring about on any other website. And even though Facebook has so much data about you based on your profile, your likes, your friends, they can push those things to the right side of the bar to show you ads that are more relevant. But again, they didn't have your mind share. You weren't currently thinking about that. So Facebook has identified a huge opportunity for them, which identifies their core weakness, is how can we take the data we know about people and in order to help grab some mind share about where they're going. So Facebook has realized that they can acquire Atlas and work with their own exchange they have internally, use that data to then target ads better for other websites you're on, and maybe now tie it into things that websites that you're on that tie to mindshare. They'll be able to monetize those things much better. So their acquisition of Atlas makes a lot of sense for that. And Facebook's realizing that their ad opportunity for generating revenue is much bigger outside of their site than internally.
Are you personally, you know, when you think about Facebook as a business, you might want to be owning, you know, 5 years from now versus now?
As a public stock owner, I don't do a lot of public investing. I try to.
Right.
I like investing in private companies where I know most of the information. Everyone else knows very little, and I know the CEO. I can walk over and say, "How's things going?"
Right.
I don't tend to do public investing, so I wouldn't want to give any advice either of what to do.
Right.
I know when it first launched, doing its IPO, I was really hoping for it to come down to $7 per share. I was going to get it maybe if it went that low, but it never did. So.
Interesting. All right. Well, that sort of wraps up the formal items that we had prepared. Anyone have any questions for me or Skylar you want to talk about? Roger?
Much of what you said was about what I call technology-driven. What about needs-driven innovation?
Is it leads?
Needs.
Oh, needs.
Needs-driven
For
innovation.
example, healthcare, energy, renewable energy. Do you in any way try to bring people who have needs together with potential innovators? Or do you seek out opportunities, particularly because you identify an area of need,
Sure.
social need?
Yeah, it's a good question because normally from a high level, the best companies are developed because there's a demand for it, there's a need for it. You're not just developing it because it's cool. Yeah, I think that's kind of the best way to identify markets. The I think even when you think that things are cool, it does always come back to an ultimate need that people have of where society is going. It's interesting, like the Google self-driving car, is that addressing an actual need of society, or is that just improving our quality of life and improving our overall productivity, being able to consume more content and get more work done because we don't have to drive 1 or 2 hours a day? We typically, when we're making investments, we're looking at if there's a strong market demand. But your question is an interesting one of actual need for it. You certainly get into that when you're more talking about the healthcare space. Is probably the most significant one. But yeah, when you're talking about the online ad space, that becomes all more of optimization. Can you do it better than it was done before? Not because there's necessarily a need for it. It's just more efficient. The human health need is an interesting one for like pharmaceutical drugs, food supplies, water. The challenge with a lot of those more human needs, whether biological or not, they also tend to be not the best venture capital opportunities as much as private equity. So those ones tend to require a lot more capital to put to work, and it's not something that $1 to $2 million or even $5 or $10 million will really move the needle for. It'll be very early in its stage of development, and there's a huge risk. Those become more binary risks. Like if you're doing a pharmaceutical drug, it's much more binary. Will it either succeed or fail, and there's not much gray area. It's a tough one to do that, but you always go back, I think, ultimately to the demand more than the need when we're looking at investments.
So this has to do with more than finance, I suppose, in the VC industry.
Sure.
You're dealing with companies that have high growth, probably are in the red for a little while. Don't have access to public markets. So what techniques do you use outside of the norm for valuation purposes? Are you looking at free cash flow? Are you looking at cost of capital? Are you using more innovative ways to look at this? Because everything that I learned in finance was looking at public companies. And that kind of gets thrown right out the window when you're in the private business.
It does, yeah.
So what kind of tools are you guys using to help you out when you're trying to value these companies? Because a lot of times they don't have a lot of operating history, so I suppose it's more of your art that side.
And many of them are new industries that don't have
no comparables to do that. Yeah.
So how are you tackling that problem?
The question that was just asked was about how to do valuations for venture capital for early stage companies. It's one of the most common questions I get. You're right. It's more of an art than a science. Fortunately, it's really easy to do. It's not complicated. So it's basically you do some really basic rule of thumb valuations. So if you're raising your seed round, the most average seed round valuations are anywhere between $1 million up to $3 million. And that's if you're raising maybe up to $500,000. So that's just typically how it is. If you're a Y Combinator coming out of a top incubator or accelerator, your valuation for your seed round won't be for $500,000. There's a company called V-Rule that just raised their seed round of $6 million coming out of Y Combinator. So that's kind of hard to think of it as a seed round anymore. It's $6 million that they're going in. So clearly their valuation wasn't $3 million because the investors would own more than 100% of the company. But at that point, you have to increase the valuations just for it to make sense. But yeah, seed rounds typically up to $500,000 is $1 to $3 million. Your first Series A, I think of Series A as pre-revenue Series A's and post-revenue Series A's. Pre-revenue is typically between anywhere from, I call it 5 million up to 7. And it could be maybe 10 if it has an amazing team, but 5 to 7 would be a typical good valuation to start with. And then if you were a post-revenue Series A, your valuation would be anywhere from, call it 10 to 20 million. So it's rough valuations that you can get to basically just on the back of a piece of paper, come up with it based on what they tell me. But ultimately, it comes down to how much ownership do I have to have in your company in order to get my return, knowing that there's likely going to be dilution, that you're probably going to have to raise 2 or 3 rounds to get to where you're going. So I have to take that into consideration. And it's really simple. It's actually not all that complicated. It's basic. What is the market showing that valuations are? And those are the basic rule of thumbs that usually work.
Do you have access to databases or anything like that you look at that have possibly similar companies? Because I know in finance, you don't have. I mean, if you're looking at a specific company, just look at something similar to get a good idea of where you're headed.
Yeah.
So do you use tools like that, or?
There are tools out there that exist. One of them is called VCExperts.com. they have pitched almost every VC under the sun to get access to their database, to put your portfolio companies in, and if you do that, they will then give you extra information about other people that are entering their portfolio companies' information. So they're kind of building this little private database, and they can give you rough valuations for things that are like that. But they kind of just tell you stuff that you already know. It's like you're getting a little bit of extra value for sure. I really like VC Experts' newsletter that they send every day, but we don't use their tools. It's much more useful for, I think, later stage VC than anything. Not for early stage VC, it becomes much more generic valuations.
Go ahead.
So more of a, I guess, comment than a question. Boeing for a while has been using a heads-up Google Glasses display, which has replaced the printouts and the giant schematics.
Yep.
Do you see the Google Glass thing as more business applications or consumer? I think fashion goes into it big. You get it, like, my wife would not do Google Glass unless it was brilliant.
Yeah, I love that question. You're absolutely right. There's going to be glasses.
Just to repeat the question. Is heads-up displays have gone from really big to semi-big now. How small would it have to be before a consumer really would grab onto it?
And your question also is touching on, is there a big difference between consumer applications versus enterprise applications? There's a company called Augmate, augmate.com. They're based in New York, a bunch of MIT guys, good guys too. They're working on software for 3D, for augmented reality glasses, but they're just focused on more enterprise solutions than consumer solutions. Google Glass, Apple's version of it, Microsoft's version of it, they're likely to be more heavy on the consumer applications than the enterprise. So this company called Augmate is working on them for, plumbers or architects that are applications. If you go into a closet and you see all these wires, well, which wire should I actually be unplugging or putting in? Those applications are great, and there is going to be a utility for them. And maybe the way that the glasses work are different. So you are going to see that split off. But when you're talking about Google Glass, yeah, it's going to be mainly consumer stuff for out and about. What can I do that's fun with them? The enterprise will probably be a little later to the game, like a lot of things with technology. In order to get enterprises to adopt those things is a lot harder, but it's a lot easier to adopt it once people are just randomly wearing these glasses. But yeah, it's an interesting split of how it'll be used application-wise, enterprise versus consumer. Yep.
I've been fortunate, and anyone else that do this, I've been spending a bit of time showing what technology. They have bioscience, wireless, and a lot of medical, etc. And they're pretty much into the future. Unfortunately, they don't go into the market and say what's needed. They're PhDs, they're just create ideas, and they look for people that can find music them.
So it's like a tech transfer based on pure science research.
The thing is, they come up with a product and try to invest in and close it. Not that I can flip the whole thing.
Right.
But when we finally sat down, and I don't hear
right.
kind of talk about what's real and what isn't real. So, we sat down to negotiate what valuation this was. Well, when they showed it to me, it was whatever it is development. They said, if we take this to the market, we put a couple $1 million into engineering to take this product that I can store in the lab with improving it. And I think that's a universal problem. That said, we have found a couple of things that are kind of interesting. But in academic environment that does advance technology, something that anyone looking for the future should go and visit and be very open about it.
Mm-hmm.
And you get great ideas, really phenomenal ideas. I'll just tell you one through my mind. They built a room, maybe about the size of this room, with huge Samsung TVs, 260 ground. They can take a camera and take an item out 1/4 of a pixel, blow it up with clarity in that room. And the way they displayed it was in that tall building in Abu Dhabi.
Oh, the big skyscraper in Abu Dhabi, yeah.
They took a camera and they zoomed in on the license plate of the car that was a couple miles away. And you could read clearly what the license
Yeah.
So think about how you apply that. Probably never, but there's so many ideas you can get from this. Does many of us look at something?
Yeah, it's interesting. With places like Stony Brook and others, it's always a question of it's the time frame to commercializable. It's not within with places like that. It's not commercializable in the next 10 years, maybe. And from an investment point of view, we're looking to make our returns in the next 3 to 5 years, and so you have to find things that are much further along. But yeah, things like that, not great for venture capital yet, but tons of amazing innovation that's happening. We have one of the companies that we're close to is a company called Worlds.com. They have some of the preeminent patents on virtual worlds, but they were having a virtual world company when the internet speed wasn't fast enough for virtual worlds. So their operating company, chugged along okay, but their patents became really valuable because they were so, future out thinking that now you have all of these, video games from World of Warcraft, Zynga, you name it, and now they're all up against potential lawsuits from Worlds. And that's probably where the most of the value is going to be, is doing litigation rather than the operating company because they were just too ahead of their time. Interesting.
It's kind of a great question. In 1996 or 7, I invested in a company called Total Entertainment Networks, which was the first massively online PC game. $100 million from every big name PC in the world. The company failed. So the reason it failed was what you were talking about. This is the reason my question.
Yep.
Because at that time they were having to work through a company called concentric networks in order to do all the transmission. The latencies were not adequate to support a Twitch game.
Sure.
So they could do 120 seconds or something, 41 seconds. The Twitch game worked. They got crammed down, Matrix and Kleiner crammed them down to 6 million.
Ooh.
Became a turn-based game, sold it to Yahoo's now called Pogo. The point is, here's a company that's ahead of its time.
Had it raised $100 million.
Yeah.
Wow.
Because of infrastructure.
Yeah.
So my question for you is, what do you see coming down the pipe when you see Google Glass and all that?
Yep.
Once you're talking bandwidth here again.
Yeah.
You're talking data center. What do you see?
The best answer, again, Google has the solution. It's called Google Fiber. So if you guys haven't heard of Google Fiber before, it's Google now. They just launched it in Kansas City. It's 1 terabyte, 1 gig. What is it? It's a huge amount. It's 1,000 megabytes. I think it's 1 gigabyte per second. That's what it is, which is 100 times faster than our current internet speed. And they've been, doing a little bit of a roadshow on launching in Kansas City to show you what the experience is like of experiencing the internet at 100 times faster than it is.
That's wired.
Say again?
That's wired.
Wired, but if it's tied to wireless, it still can be chugging that a lot higher. What's also interesting, actually, about both on the wired and wireless version of it, I'm not sure how they're doing this, but their version of the fiber, because right now upload speed and download speed, there's a big difference, right? They've somehow been able to take them, and it's much closer of what the download and upload speed is, which is one of I think a huge significant aspect to it. But if you look at what in the United States, what we're currently paying per I think megabyte of speed compared to what the rest of the world's paying, we're paying vastly a lot more per each of the speed increments. And so by Google Fiber seems like a natural fit for where everything's going to put us more in line with it.
Another thing coming out, I looked at it. They're approaching it about 50 bits a rate, and where there'll be zero buffering no matter how much. And not by speeding up the end product, getting end users to cache their data and taking all of those different caches, billions of traces, and simultaneously send them to give you the simulation.
Sure. Interesting. A point that I want to bring up to you about a company that raised lots of money from different VCs up to 100 million and then brought their valuation down to 7. The gentleman that asked about the valuation, how do VCs do the valuation? One of the things you have to worry about as an entrepreneur is it's just as bad to raise money at a really low valuation as it is to raise money at a really high valuation. Because let's say I actually do give you, $2 million at a $20 million valuation, but then 12 months later you're out looking for more money. You're going to have a hard time finding investors that want to give you money at a $22 million or $25 million valuation. So don't screw yourself over. You're basically you're setting yourself up for a huge amount of anti-dilution or a huge amount of dilution. And the only ones that will probably have more of the anti-dilution rights will be us as the investors. So you're really screwing yourself over as the entrepreneur. You think you're getting away with something in the beginning by doing it at a nice high valuation at the beginning, but it doesn't always turn out the best.
What are you doing to X and 3X?
Good question on liquidation preferences. Typically for Series A, we don't do multiples of a liquidation preference. We always have a 1x liquidation preference on our participating preferred. It's usually for second and third rounds based on how the company is going. We'll add additional liquidation preferences, such as if we know that the company now has, we were originally planning for that company to exit in 5 years, but now the company might be exiting in 2 years, and it'll be a much lower exit. We'll put in a 2x or a 3x liquidation preference so we can still hit the same type of IRR and a lower exit than before. So it really is on a case by case, but most cases 1x is pretty standard.
Last question.
So our fund specifically, we focus on investments between 1 to 3 million per round, but we will invest up to about 7 to 10 million over the life of a company. So as investors, we come in knowing that there's always a good chance, because we're investing at more of the early stage, both pre-revenue or post-revenue, or just started generating a little revenue, we know that the money we're putting in is probably not going to be the last money that company needs to exit. So we're expecting to some degree that there'll be a second and third round before an exit. So we kind of have that in mind when we are doing our investments and realizing what our current ownership is. But typical first investment in every one of those 3 investments will be 1 to 3 million. But depending on the VC, most VCs typically invest, I'd call it 3 million and above. So we kind of fit into what I call the missing middle. We're larger than a traditional seed fund, but smaller than your traditional venture fund. So it allows us to cherry pick a lot more of opportunities, because that 1 to 3 million is the hardest capital to raise for entrepreneurs, and that's why I've coined it myself as the missing middle. I launched an initiative a number of years ago at the World Economic Forum called the Missing Middle Initiative that's all focused on how do we create more funds that invest that 1 to 3 million, because that's what the entrepreneurs really need when they're starting out.
Okay, and I'm going to follow up that. Go ahead.
Yeah.
So I'm going to follow up your ad for Centripetal Capital.
Yep.
With just a listing of some of the stuff that's coming up here at the center. Something that is not yet posted, but it's happening, is Startup Weekend. We're doing our second Startup Weekend at the end of April. So April 26th or 28th. You bring an idea or your desire to get on a team and feel what it's like to be in a startup. At the end, the best pitch or a business idea is evaluated, and there's prizes for the top 3 companies. It's a lot of fun. We'll be just taking over the whole center to do that, and it's going to be a great experience. I hope you'll all consider doing that. On the 27th of March, David Rose, who's a major angel investor, is coming to the New Haven hub, and if you want to register for that event, he's doing a master pitch class. If you want to go to that event, you go to ctnext.com, and if you register as a member for that, that's the website for the statewide innovation ecosystem, and register there for this David Rose pitch event. It's happening up in New Haven.
Yeah, David's the one that Gust, I believe, too.
Gust is his business.
Yeah, he was the founder of Gust, but he's one of the more prominent angel investors in New York.
Right.
Old guy, been around for a while. But if you guys are familiar with Gust, that's his baby.
Right. That same night down here, a very different sort of event, we're having the CEO of X+1 Communications, a guy named John Nardone, lives in Fairfield. Half the business is based in Norwalk. That's their tech group. So whoever says there's not enough techies in Connecticut is wrong. Major tech group for a major player in the online marketing space, X+1. And John was really brought in as CEO. The company was already 10 years old.
Wow.
Plus, he was brought in as CEO. They were a competitor to DoubleClick. So in 2008, he was brought in, and they basically completely pivoted the company, and now they're a provider of information for major brands to market and target who they want to be telling their story to. So that's the same night. That's the 27th of March. The Pardon My Disruption brown bag is going to be here, same time, same channel next week. And every Tuesday night, if you want to come around and hang out with coders and talk about technology ideas, we have a free hackerspace every Tuesday night starting at 5. So hope you'll find a chance to come down to the Innovation Center again. Thank you for being here today, and thanks to Skylar for doing such a great job.
Awesome.